Hey everyone, now that Nio and Rivian have reported their latest quarterly results, I thought it'd be a great time to share with you which one of these EV stocks is the best one to buy right now. So that's what I'll do in this video. I'll look at each of their most recent quarterly results, and then I'll compare their valuation, and then I'll answer which one of these two EV stocks is the best one to buy. Let's start with Nio. In its most recent quarter, revenue increased by 7% to 1.55 billion. The net loss improved to 690 million. Vehicle deliveries disappointed in its most recent quarter, showing a slight decline year over year. And worse yet, management is expecting another decline and the decline to worsen in the second quarter. Management is expecting the decrease to worsen in the second quarter, forecasting deliveries of 24,000 in Q2 at the midpoint. That would be a decrease of 4% from last year. The company did launch a new model on May 24th, so Nio is hoping that could ramp up demand for EVs in China. Of course, the reason for the declines, one of the big reasons for the declines in China is that government incentives for EV purchases have diminished significantly compared to the US, where consumers still have a significant incentive tax credit to purchase EVs. Now looking at Rivian's latest quarter, its revenue increased to 661 million, up from just 95 million in the same quarter last year. So revenue growing by more than 6x. The loss from operations improved to 1.433 billion. That's still a massive loss on the bottom line, and Rivian is not even positive in terms of gross profit, not expecting to reach that feat until 2024. Thankfully, Rivian does have $12 billion of cash on the balance sheet as of March 31 to help it bridge the gap between now and when it can be profitable, at least in terms of cash flow, and then become self-sustaining. Okay, so now let's look at their valuations. Measuring by the forward price to sales ratio, Rivian is more than twice as expensive as Nio, trading at a forward price to sales of 1.674 compared to Nio, which is trading at a forward price to sales of 0.797. Each of these EV stocks is down significantly from their peak valuations as investors have become less enthusiastic about unprofitable growth stocks. However, if I was to choose one of these two stocks to buy today, I would pick Nio. I think Nio's total addressable market is larger, given that it's focusing on the Chinese market, which has a larger ceiling for total car sales and total EV sales. And Nio is further along in achieving profitability. It's already generating positive vehicle gross profit margins. So for those reasons, I would pick Nio as my top EV stock to buy between these two. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.